So are older homes harder to get a loan on? The answer to that question is no, not on their surface, right? The age of the house has nothing, it's not going to stop you. It's not going to be more difficult to get on a loan on a house that was built, 80 years ago versus 50 years ago, just because of its age. However, there are some differences with older construction homes that can not directly but indirectly, potentially cause problems with getting a loan. First one is, basically condition of the house, just by its very nature, just on its surface, right? A house that was built 80 years ago versus 6 years ago is probably going to have, especially if like maintenance wasn't done, like, there's things like cast iron pipes that, can corrode and go bad, right? So there's more stuff that potentially could be wrong with a property. Just because it's old doesn't necessarily mean that stuff is wrong, but we see a higher incidence of those problems with older homes versus newer homes. Cast iron pipes, the sheathed electrical wiring that can be a fire hazard, older electrical panels, and that kind of ties into the next point of like why sometimes it can be more difficult is insurance. So especially here in South Florida, where we have a high rate of hurricanes, homes that are older that were built longer ago than were built to different building codes, right? So the insurance companies know that, and they sometimes will charge a higher rate for insurance for a property that was built before a certain cutoff. Like a lot of the building codes correspond with the big hurricanes that we've had here. So like Irene, Andrew, they update the building codes after one of these hurricanes comes in and devastates a whole area, and they say, oh hey, this is what worked, this was what didn't work. And they update the, like kind of the ideal building code, the way that roofs are attached to the foundation of a house, stuff like that. So, typically something that is built, 2006 is one of the cutoffs. There's one in the 90s where the building code's gonna be different. And the older the house is, typically the more that you're gonna pay in insurance. So while that does not directly make it more difficult to get a home loan, people who have maybe debt to income ratio issues, or maybe somebody finds just a home that they absolutely love that was built in the 1920s, historic home, whatever, and they were not budgeted to spend $9,000 a year on insurance, because most homes in their area, they spend $4,000 a year. Like it costs $4,000 a year to insure just an average home. They look at this house and that $5,000 difference a year in insurance cost, adds almost $500 a month to their monthly payment, and that might kill a deal for somebody who's like a little tight on debt to income ratio, and they may just not want to pay that much money to insure a property. That's something that typically isn't discovered in a lot of cases until after the home inspection's been done, because most buyers are not shopping for home insurance quotes like before they put an offer in on a property. They do it during their due diligence period, and then they find out, oh wow, this insurance is a lot more expensive than I thought it would be. So that's a pretty comprehensive view. There's a few other things when it comes to like foundation and stuff like that. Generally we expect to see just some more deferred maintenance, more issues, depending on when the last time a home was remodeled, and how well the owner has kept up with the work on that property, the older it is.